Welcome to Dennis Money's 2 Cents, your weekly recap of headlines and stories. I'm Matt.
I'm Will.
And I'm Rabih.
Boom. Hello, gentlemen. Excited to jump into this one. For our agenda, Rabih, we got market update as always. Did you tease anything last week? I don't remember.
You're always I teased earnings. So
you did tease earnings.
Yeah, last week only like half of the companies reported earnings in the S&P 500. We're over 400. There's 50 reporting this week. So now I can tell you what happened with earnings.
Love this. Love this. So we have an earnings update, an overall market. We've got crypto fallout. Will's got some. Will, we realize that you are the crypto guy. You love talking crypto.
Yeah, I think it's fascinating. Yeah,
you're a crypto bro, I think.
Yeah, I could be that guy.
And then we'll hit some WeWork news that just happened. I think. In fact, I was leaving the gym this morning and I had a little Wall Street Journal thing pop up on my phone. So I was like, oh, we'll talk about this today. So we'll do a WeWork update. So Rabih, let's jump to you on the giving the people what they want and talking earnings after you teased it for 2 weeks.
Talking earnings. And actually, earnings were doing something and the market was doing something else. So let's start with earnings. As of Friday, 400 of the 500 companies reported, and this week there's another 50 reporting. But what's interesting is that, as I talked about last week, earning quality and how good our earnings are is usually measured by the surprise factor above analyst expectations or below analyst expectations. And last week we were saying, oh, it seems like the revenue is only 1% surprise factor above analyst expectations, which isn't really that good. I went and searched for like the long-term average on average, how much do companies overperform the analyst expectations. And on the revenue, which is the harder one, with the earnings, you can do some accounting and make it look pretty. But with the revenue, which is the harder one, it's usually on the long run, 1.3%. And the last 4 quarters, it's been 1.9%. However, for this earnings cycle, the outperformance or the surprise factor above analyst expectations was only 0.5%. So this also packed with gloomy guidance. Like most companies are saying that we're seeing economic slowdown. Some companies are firing people and it's harder to make new business and generate new sales. So those are where the earnings are. And in a rational world, this should have its impact on the market. But the market is influenced by more than one factor. And there were other macroeconomic factors that overshadowed what earnings told us. So talking about macroeconomics, last week, the Federal Reserve, the Open Market Committee met, and that's when they were supposed to come up with a decision on what they're going to do with interest rates. And they decided to stay put and not hike interest rates, nor cut them, stay as they are at the 5.5% level. But what's interesting is that, remember, every quarter we jump on like the huddle and we read what the summary of economic projections are and what the Fed thinks interest rates are going to be by the end of the year, and we start like trying to calculate how many hikes are still left. So given their economic projections last quarter in September, they said there were still 2 more hikes for the year. They did one of them and one still remains, which people were expecting it's either now or in December. But given the language the Federal Reserve spoke with on Wednesday, the market now kind of believes that one hike that still remains is not going to happen. And this just means that, there's a rate hike that we should not really price into equities, which would fuel equities to go up. And that's what happened. Another macro environment, feature or headwind was that the unemployment rate that we get every single month finally broke above the 3.8% and is now 3.9%. So for a couple of months, it's been fluctuating between 3.8, 3.5, 3.8%. And the Federal Reserve would go out there and say the fight against inflation is not over until we see some softening in the labor market, which that means they need people to get fired so they spend less, so they bring inflation down. And just now that we see unemployment rate actually tick up above 3.9%. And something very funny I read last week, it's like bad news for the economy, aka higher unemployment, no need to increase interest rates, is good news for the market.
Good news. Yeah.
Because what happened since not last Friday, the one before it, October 27th, is the S&P 500 is up 6.4%, which, for an economy that people are starting to get fired, there's a slowdown, we don't need to tackle inflation as much. You wouldn't expect that to be a good indication for stocks, but that's good for financial assets in general, and they have rallied. So last week has been fascinating, given that the week before that, we were talking about how it was a very strong economy, Q3 real GDP of 4.9%, but we've had 3 months of negative return in the S&P 500. Well, last week, we finally started seeing some weakness in the economy, but the S&P 500 gave us 6.4%.
To the moon.
So
isn't that so interesting, Rabih, to that point of just like your vantage point matters, or the context of the overall market matters? Because to your point, normally these things in a vacuum would be negative, right? People would be like, oh, people are losing their jobs. Obviously, for those individuals, very sad. We're not cheering for that. But it is interesting that because of the inflation story, the inflation narrative for so long, that piece of data that would be negative in most cases actually has turned the market upward, because now everyone's saying, oh, maybe we have inflation under control. But 5 years ago, 2 years ago, 6 months ago, whatever, like that data would have been looked at as negative. It's so fascinating to me how the narrative is really what controls, like, it's kind of like, sorry to go all nerdy on you, but the Shakespeare quote that nothing is good or bad, but thinking makes it so. It's like we decide what is good and bad depending on the narrative of the day. Yeah, our perspective. It's kind of interesting.
Rabih, does this mean rate hikes are over? I mean, is that what the market thinks, that rate hikes are ending?
Actually, yeah. Like if you look at the Fed fund futures, which is the market expectations or where federal Fed fund rates or interest rates are going to be, they don't think we're going to go higher from where we are. And they are pricing in a quarter basis point cut in Q2, another quarter in Q3, another in Q4 of 2024. So the market thinks on an aggregate that by the end of 2024, we're going to be 0.75 below what we are right now.
And is that
no one knows?
No one knows, but the market is a guessing machine, and they're just making all their guesses, right?
Right. And just to like give an indication what we mean by like this is what the market is predicting, we actually the formula is you plug in a certain interest rate and it gives you what the price of a bond should be. Now, if you look at what the actual current price of the bond right now and you try to reverse engineer what the interest rate is, that implied interest rate is what we think the market is saying the interest rates is going to be. So when we say here's what we think the market thinks the interest rates are going to be at, we're just looking at the current prices, and this is telling us what they think. And we know prices are volatile, so market participants change their mind much faster than the Fed does usually.
Yeah. And again, just as we talked about last week, it's the disjointment of the market, as we're just highlighting. The market is disjointed from the economy because the market is predicting the future. It's trying to time or trying to tell us what's happening maybe 6 months in the future. And the economy, the data we're getting a lot of times is actually looking backwards, right? Even the data you're highlighting with unemployment numbers, that's all looking backwards.
Yeah.
So that's, again, why we see a lot of disjointment in these numbers. Awesome. Anything else, Rabih, that you want to hit there?
No.
Okay. Anything you want to tease? Anything you want to tease for next week?
Actually, next week is a very calm week in the market. So
okay, opposite of a tease.
I'll tease you to try to like wonder what I'm going to be talking about.
Perfect. I like that.
I don't know yet.
I love our cliffhangers. Okay, let's jump ahead to the crypto fallout, the crypto and NFT stories of the day. We're going to toss it over to our resident crypto bro.
I guess that's me. I guess maybe just like Twitter, maybe my X/Twitter is just like a cesspool for like crypto news kind of, maybe. I don't know if I somehow got onto that like algorithm. And
I love that they changed it to X, because when you just made that sentence, it sounded like you were talking about like an ex-girlfriend or an ex-wife or something.
It's like, such a weird thing
Twitter
to say.
And my ex.
Yeah. X. And the X is, what is a tweet now? It's an X. Yeah.
I have no idea.
I saw an X. Dave Portnoy sent out an X because it's
a tweet. We're going back to Twitter. It's Twitter. Can't do it.
Dave Portnoy tweeted he was wrapped up in a crypto scandal. It's come to light that there was a crypto scandal involving
shocking
an asset called SafeMoon. maybe the most ironic name of all time.
It really is. Safe Moon.
You gotta like, yeah, exactly. The ultimate oxymoron. You at some point they were like, what should we name this thing? Like, oh, let's just call it like safe because it's going to be super safe. Even though those guys at the deep down knew it was a Ponzi scheme.
Of course.
And then to the moon. Why not go to the moon? So
exactly. That long story short is such. Wait, really quick. We have to focus on this because you're so right. How many times do we have people say some iteration of, I want returns, but I don't want to lose anything. I want no risk. Yeah. And that's what they were going with, is like
for the name.
The connotation of like, this is totally safe, guys. And it also just happens to be going to the moon. It's so ridiculous.
So
sorry if anyone lost money in this. I really apologize.
Safe Moon was part of the crypto craze. They got like a couple influencers to post about it. Dave Portnoy's the guy who owns Barstool Sports. He does the pizza reviews.
Yep.
You probably heard of him.
One of the ultimate winners of COVID, right? He got so popular during
for
COVID.
Sure. Yeah. So I think he invested like 40 grand into this thing. And like, he's just in everyone's face at all times about everything. So he was touting Safe Moon as like, this whole big deal. And you can kind of look at him like an influencer of the, like a crypto influencer in that sense. Turns out this thing grew to like $8 billion market cap, like tons of, I have friends who owned Safe Moon and they were laughing at it. Oh yeah. I mean, it was like 50. No, I didn't personally.
Oh, okay.
Like, Will, how much you own of it?
Yeah, how much, Will?
Will's like me and Portnoy put in 40K.
Yeah, 40K. Yeah.
Not a big deal. Yeah.
No, we danced on my friend's graves a little bit this week when we were just talking about it, but they both had like $50 in it. So they were hoping their $50 would go to the moon, though.
Of course, but safely. A safe voyage to the moon.
Long story short, it was a Ponzi scheme. Two of their founders got arrested this week. One in New York, one in Utah. Great, good luck for Utah. Yeah. And apparently the other one's still at large. So who knows?
Oh, he's gone. He's run.
They can't find him.
Dang.
Took to the moon. He might have gone to the moon. They took
Elon,
200 million out of this thing and bought like fancy cars and houses and things. So, anyways, this is all just to say, and NFT. I read an article about NFTs as well, which, if you remember back to the NFT grave, we're kind of dancing on graves a little bit right now.
Yeah, let's do it. I will do the.
I think we just set a little moonwalk on it. So
a little moonwalk, yeah. Oh, I like that.
I read an article that said 95% of NFT projects are worthless at this point. Yeah. And so if you remember back to the NFT craze, this was like the basically digital artwork that was selling for crazy prices, like sometimes 6-7 figures for these big transactions. And this was all just part of I guess the moral of the story is there's always going to be something. There's always going to be something sexy and exciting. And, it's moved from crypto to NFTs to AI to something else in the future, and it was tulips. However many I was going to say, let's go
back to the 17th century with tulips. I mean, it's the same thing.
That's not to say that there aren't some winners. There probably are some winners who got in at the right time and got out at the right time, and so, there's maybe some good things that come of this. Maybe there's there's a future for some NFT projects that can draw on some of the good things that have the blockchain technology introduces, and some of the cryptocurrencies, namely Bitcoin and Ethereum, some of the main ones may end up being a staple in the world for years to come. But it's just the craze is what you have to avoid with a lot of this stuff. And you've got to avoid all of the ancillary noise and try to focus on why you're doing what you're doing, focus on the fundamentals, and never treat it like a casino, because it's going to treat you back like a casino,
Yep. Yeah. And we joke, right? We were joking before we got on. We're making jokes now in regards to like dancing on graves. Truly, the only reason that we're like pushing back on this or making jokes or laughing is honestly, like, let's be honest. When you have the crypto bros, right, tweeting out left and right, Xing out, whatever you want to call it, have fun staying poor. Like that was kind of the theme during COVID. Like, you idiots are not getting on board, to the point where like there was people out there. We were talking about this before we went on. There were people out there literally telling people on Twitter and social media that if your financial advisor is not bringing up crypto to you as a client, you should fire them. Yeah. Like this was kind of a thing going around. So when you have that like that level of hubris and like you're out there that arrogantly to everyone, telling everyone have fun staying poor, and like accusing advisors of being like irresponsible, like truly like being irresponsible for not bringing this stuff up, you better be prepared when it flips on you that we're going to be like, wait, tell me again, have fun stay. Like what did that, like what were you saying? Like we're going to flip around and be like, no, this is exactly why we stick with a long-term strategy and principles and philosophy that doesn't involve this kind of crap. Because and it's not like haha we were right. It's like, guys, this is what happens. This is just another lesson of what can happen. And how many stories did we hear that was so sad, like truly super sad stories of like, you know, those guys or let's be honest, a lot of them were about men that were like putting their life savings into these types of things like SafeMoon.
Yeah.
And completely
NFT projects, millions of dollars.
Projects, right? And it's honestly sad and frustrating for us to hear. And so it's more like frustration being released more than anything rather than us like laughing at people. We're really not trying to laugh at people. It is honestly sad.
Yeah.
It's human nature. Again, like you were saying, Will, markets change, humans don't. And that's why this kind of stuff, meaning the individual things that are the craze around, like you go back to, again, the late 1600s with tulips all the way to today. It's human nature manifesting itself. And we want to rush the process. It's just in our nature. And so we're not blaming any individual for jumping into this. We're just saying that this is another lesson as to why
behavior always wins.
Be careful. This is why you need to have a system in place, rules in place, guidelines in place,
accountability partners,
accountability people, you know, people that to hold you accountable to your. But every time you want to, and here's the thing, we admit, right, during that whole craze, we had meetings about this. We did. I fully admit it. I was bringing it up like, guys, should we be talking about this more? Like I fell prey to it.
And there are clients that move 5% of their investable assets into crypto, which is fine. I mean, that's part of if that's the allocation that's safe enough for an overall financial plan, so be it. But
you know, but we also talked to dentists. I know I did, who put away a lot more than that.
Right.
And lost a lot of money in this stuff. So we digress. But this is kind of on this, just a really quick, kind of in conjunction with this SafeMoon fiasco. Sam Bankman-Fried, right, the FTX founder and now official criminal, he was found guilty. I think, Rabih, you were saying on all 7 counts, right, of fraud and whatever else they were charging him with. What did you say he's facing up for prison?
The verdict is going to be over 100 years of jail time. So good luck, I guess.
Yeah, good luck. Why don't they just say life? I don't know why they don't just say, "Hey, bro, you're gonna be here forever." Okay, we will move on with this is. I don't want us to be a negative show. Now I'm feeling like we should have flipped it and been a little bit more positive, because the other thing that we wanted to
Rabih already gave us the positive market news, so the market went up. Yeah,
you're right. We should have ended with that. The other piece of news, kind of along the same lines of, I don't know if you want to call it fraud, but we'll call it malfeasance, is the WeWork. Is WeWork. WeWork just announced they're going bankrupt, or they're filing Chapter 11 bankruptcy, which I don't. So Chapter 11, if I understand it, is more the reorganization. Rabih, do you know this?
I believe so. I'll have to.
We're not attorneys, but I'm pretty sure it's the reorganization.
It's either Chapter 7 or Chapter 11, but I don't know which is which. Yeah,
I know the main ones are 7, 11, and 13. Here we are sounding like total idiots talking about legal jargon. Either way, WeWork filed for bankruptcy. This is kind of like, for lack of a better way of putting it, kind of a cherry on top of the cake for them. That's probably a horrible way to put it, but just with how much,
like a hot dog cake or like burnt toast cake or something.
The maraschino cherry, which are awful, by the way, on top of the burnt hot dog cake. Exactly. Basically, since 2019, WeWork has just been an absolute mess. They peaked at $47 billion valuation at their last round of private funding. And then I think within like 6 months, it went from 47 billion to, I think the article we were looking at, Rabih, is down to like 10 billion, almost overnight. And then, so a lot of that had to do with Adam Neumann. There's a whole documentary. I have not seen it. I think you guys said you have not seen it either. I've heard it's fascinating, but kind of a double whammy here. So Adam Newman, founder of WeWork, completely like just botched it as far as how he handled the company, and again, hubris and just mismanagement of everything. And then COVID hit. So not only were they having mismanagement, but then COVID hit and just obliterated the company. So all this to say, there was a line from this article that I thought was actually really, I kind of perked up. I was like, oh, this is actually, there's a lesson here. And I'll throw it to you guys after this. So it says, this is right from the Wall Street Journal. WeWork, valued at $47 billion at its peak, is facing the consequences of excessive expansion. And I just thought of what we see with dentists at times with this term of excessive expansion. And I just think when I was reading through this, I was thinking just the lack of intention, the greed that can, obviously this is a whole nother level, but we see this with dentists, right? Will, I mean, we've seen this with dentists, again, not having that intention and just saying, I got to grow just to grow. And again, this is a one end of the spectrum, right? Far into the spectrum of what can happen, but on a smaller scale, we see this with dentists at times as well, right?
Yeah, I mean, you get in this, like, I see a lot of clients who just, I think they think that's the process. I think that's in their mind, however they worked it out, is like you buy one practice and then you buy another one, or you open another one until you got 6 practices, and then it's just, you make a ton of money and it's over, the game over, you won. I think that's where you get into trouble is, like, I've seen so many clients that have a really good thing going at one practice, and then the minute they open up another practice or they buy another practice, they end up cannibalizing their good practice, and it just ends up like you're kind of having to unravel, what has happened, the expansion that you got out just too far out in front of your skis. And so it's really important to, number one, realize the grass isn't always greener. Number two, realize sometimes if you got a good thing going, like, stick with it, keep doing what you're doing. And, then get really into the weeds on why and how you're ready for another expansion, not just because it's time to expand, right? Yeah. Not just because you feel like your schedule's full and you can do an expansion, right?
Yeah. Yeah. The key word there that you just said is why, right? And when we say that, sometimes why, I've realized, is an abrasive question, right? If you say it like it's kind of aggressive, it's kind of putting someone on their toes a little bit, or I should say on their heels. It's like, why are you doing this? That's not what we're meaning. We're just saying, hey, have you asked yourself why? Like, can you answer the question why you'd want to do this? And some people have a clear path. Like, they know what they want. They've kind of started with the end in mind. They've set a goal for themselves. And there's nothing wrong with saying, I want X, Y, or Z thing. And whatever reason you have is totally valid to you. It's totally personal. But Will, I think what you're talking about are people that we see, unfortunately, expanding or growing just for growth's sake. Just because, like you're saying, I don't know, it's just what I'm supposed to do. I think we do this in a lot of life. This isn't just dentists. This is just humans. Like, we just kind of do this. So again, we wanted to bring this up to bring it back to dentistry to say, kind of always know your why. Something we talk a lot about is like, understand your values. Like, what are your priorities? What are your values? And don't let outside forces tell you that that's the wrong thing to value. So for example, some of our clients are like, I just want a single location and I've kind of maxed out my profit, or maxed out my collections, or maxed out my profitability. And I work 3 days a week. I'm living a good life. I'm valuing time with my family. Awesome. There's nothing wrong with that. Other people want to go build a 5-location DSO. Cool. Just know your why, know your values, and align that money with your values, right? Rabih, anything you want to add to this?
Yes, I really like the why. And I would add on top of the why is just, are you doing it strategically? Because like in business, just like as investing, growth might not be the best move forward. The best move forward would be surviving. So in investments, when there's a crash, you don't want to lose all your money. And in a business, when there's a recession and you can't bring in new revenues, you just need to keep what you have and try to survive as much as possible. And in the case of WeWork, just to like bring it back to full circle, we're trying to expand in an industry that was shrinking since COVID hit and since commercial real estate has taken a hit. And that's just not being strategically positioned well. This can happen in your portfolio while you're not in equities when the market is growing, and being too much in equities and in sensitive stocks when the market is crashing. That's one way to think of it. So each phase of the market or the cycle has the strategic positioning they should be in, and a mistake could be fatal, and that's what you want to avoid.
Right. I love that. Sorry, Will, do you have anything else to add on that?
I was just we don't mean to shut down. Anybody who wants to expand can expand. That's just,
of course,
it's just do it because we've seen plenty of successful expansions, right?
Yeah.
It's just do it for the right reasons. Know your why. Be super strategic about it. Have people in your life that are double checking your math at every turn and making sure it's like, this is why we want to do it. And WeWork, obviously, I guess you can't predict a global pandemic, but even without the global pandemic, they were getting too far ahead of themselves.
Yeah, totally. I love the point you made too, Rabih, in regards to investing, kind of being like, sometimes success is survival, right? And we talk about all the time, basically the two main things you need to be successful with investing is, number one, a foundation of diversification. And then number two is time. And for you to like actually see success, you have to have that time on your side. And to your point, a lot of times that comes down to survival. Do you have the right strategy to survive the rough times that always happen, right? The market is always testing that survival ability. So I love that. And then Will, to your point, we are in no way saying expansion is bad at all. We have a ton of clients that do. We just want them to do it so thoughtfully and intentionally, which is a huge value. Like, that's one of the things that we do a lot with clients, right? Is we're not pushing back to say we're on the other side of the fence. We don't think you should do this. We're just wanting to kind of stress test their thought process. Yeah. So we ask a lot of questions. We're curious, just like, hey, have you thought about every angle of this? That's all we're saying to people. So, okay, I think we did circle back. I think we made that more positive.
Oh, that's good.
We kind of brought it back, right? Okay.
Yeah.
Any other final thoughts you guys want to send us off with? Okay.
All good.
You guys are great. This is awesome. Thank you so much for listening, whether it be live or on the podcast over the weekend, whatever you're doing. Winter is coming, as Jon Snow says. So that is our 2 cents. Until next time, bye-bye.